Hey everyone, this is Rahul with the Alternative Investors Hangout, and today we have a returning guest. He is Panama Orange. You could follow him on StockTwits. Panama, thanks for coming on again.
Can you hear me okay?
Yeah, I can hear you.
Um, so we haven't talked, what's it been, 6 months?
6 months, maybe 3, 4 months. I don't remember.
It's been a while, but, I in the last video we did, I made the point how there's just no reason for the economy to improve. We heard all these scenarios, how cheap gas and millennials moving out of their house finally at 30 and all these things the cheap gas was supposed to finally kick in a consumer boom. We've had cheap gas for almost a year, and there's been no consumer boom at all. I mean, Walmart's firing 10,000 people, shutting down all these stores, 16,000 people they're laying off worldwide. But that's not the only, Macy's, and I could name 20 other big box retailers that are having some kind of crisis or some kind of problem. And when you look at the big picture on that, it's pretty horrifying because we do have cheap gas. And the narrative also is that employment is improving, which is another made-up fantasy because if you look at the quality of the jobs created, it's all low-wage jobs. The labor participation has been stuck at like a 30-year low. It ticked up finally in this last report like 0.1%, something pathetic. But clearly there are not career-forming, good-paying jobs being created. And they're not applying for mortgages, the percentage of millennials living at home is ticking up. I don't know if you saw that came out a few weeks ago. You can look it up on Google or
I think it's been trending
Google
for a
News
while.
or Twitter. But that is really, really devastating because the central thesis was millennials have to go buy the assets of all these baby boomers who are retiring and about to cash out of their stocks because they have to. Someone's got to catch that falling knife, and it doesn't look like that's going to be happening.
That's true. We know that this recovery has been primarily due to the Fed keeping rates very, very low, and also other central banks as well, and that liquidity is coming in from the ECB and specifically from Japan with this yen carry trade. Now that the Federal Reserve has raised the Fed funds rate to 25 basis points, don't you think that even though the stock market has been not hammered, but it's down from 18,300 to 15,900-ish around now, couldn't it just go straight up if the Bank of Japan decides to go crazy or the ECB decides to have more QE than what the market anticipates, even though everyone knows they're going to have some sort of QE, but they just go beyond expectations, that liquidity comes in, and yes, we may still have horrific economic data coming out as you're mentioning, but the stock market could just go up just like it did in 2014 when Bullard made a comment saying that, hey, we're not going to raise interest rates right now, but instead of the United States being easy, you may have other central banks being easy, and that brings liquidity to the United States.
Well, the Dow is sitting right now where it was literally at the start of 2014. So it's actually, for 2 years, it's done nothing at this point. I'm bringing that up because people talk about this correction like, well, this is a recent phenomenon. Stocks did nothing to go straight up since 2009, and that's complete BS. We went sideways for a year and a half, and now on a Dow chart, we're sitting where we were 2 years ago. So this isn't just like some temporary blip. We were going sideways for a while. And, it seems to be part of a giant rounding top formation in the Dow and the S&P. And no, I don't think Japan has the ammo and the ECB has the ammo either. And if they both did those things and, push the dollar higher, well, we already know the inventory to sales ratio in the U.S. is at full-blown, recession, borderline depression levels. And the inventory to sales ratio is probably the most reliable indicator of economic export health. So you push the dollar index up just 5 to 10% more, and that's full-blown depression because we're not exporting as it is. We're not really consuming anything here either, but we're really not exporting if the dollar being this strong. And this game of ping pong where all these different banks around the world try to push their currency down to push the other currency up, because that's always the intention. Whenever you push your currency down, you're trying to make other currencies more expensive relative to you for, to help your exports. But everyone's doing that now, so that game isn't working anymore. And also, the Bank of Japan has become such a joke at this point. Last night or Friday, there was another, massacre on the Nikkei, and they can't get their economy started whatsoever because they're a demographically imploding, dying country who has no immigration. And that's an example of, extremism in immigration, where if you just go the route of, okay, we have none at all, you can pretty much just die as a country. But then
on the other end, Europe, on the other hand, is on the extreme end of what Japan is.
There's all these conspiracies that people float about Obama, but there's one thing that's happening in plain view, and you could do research on it and find the video. He's been flying in refugees on UPS planes. You could see the video of them getting off the UPS planes. We have the Democrats in this country want every refugee they can get here because it's a guaranteed vote, and their kids are guaranteed votes probably for 2 generations after that. But the political class in Europe, the people are freaking out, and they don't want any more refugees, whereas the Democrats over here want all the refugees. So they're going to keep figuring out some kind of pipeline to get those refugees from Europe to here, because it's, there's a political sort of difference where we want them and they could care less. And a lot of that's because Europe has, in a lot of countries, a more parliamentary system. So it's not a matter of just one party winning by 52% and then holding that lead and you get all these immigrants to vote for you. It's not that simple in a lot of European countries. So that's something that we know how bad labor participation is in this country. It is horrendous. If you look at shadow stats, the real unemployment rate's 23%. And we know in Europe, before this refugee migration started, they had a massive unemployment problem there. So we have the U.S. and Europe that just don't have any jobs to provide. And we have all these refugees coming, and whether or not they intend to work, the vast majority are going to end up on welfare. And that's, we talk about Islam and the radical Islam and incompatibility, and the main problem is lack of jobs. If we had lots of jobs to just provide, their theology or none of that would matter, because we'd actually need them to, hammer nails and rivet things, but we don't. And that is a major problem economically for Europe, especially recovering, because they already had a crisis before this mass migration started. And
I don't think it's over yet. I think that's going to be the final nail for the euro.
Right, the migration is not slowing down, but there is a problem with the U.S. and the dollar, and that is our level of dishonesty in this country about economic health is extraordinary. It is borderline North Korea, the way we lie about
I don't think it's the same as China, though. I think China has way more problems, and you've seen it in their markets lately. Now, I do agree with you that we lie a lot, or the U.S. government does manipulate the statistics, but China is the United States on steroids, in my opinion. And I think your thesis about the dollar... Go ahead.
But all the economic data that came on Friday was right here from the U.S. It was retail sales in December, which were apocalyptic. It was inventory to sales ratio. So this idea, this clean shirt, and the other guys have problems and we don't. I was saying at the top of the market, that is complete BS. We're covering up all these problems, but you cannot do that permanently. And we saw that in 2007, 2008. The actual economy and housing rolled over about a year and a half before the market did. There was a substantial delay. And that's the same thing that happened this time. They tried to cover it up. They tried to say the economy isn't falling apart, things aren't happening. And just like last time, They got away with it for a year and a half, 2 years, and you saw the market making, in the Dow sideways for 2 years now, and now they can't cover it up anymore. But the difference now is they've already done TARP and 3 QEs, and they're going to look like idiots if they have to do QE4, which they'll probably have to do, and they'll look like idiots if they have to do anything. And this kind of brings me to why precious metals, I think, are so important in investment here. And that is, we could easily see a repeat of what we saw in 2011. And that was in 2011, in the period when silver went up 100%, basically doubled in that period, the US dollar only moved down about 8%. So it took like an 8% drop in the US dollar to send silver up 100%. So when people say, well, gold and silver, they can't go up because monetary velocity is too low and they're a commodity, and yeah, they are until you have a loss of faith moment like we had after the downgrade. And I think absolutely we're having a loss of faith moment where the most optimistic people are starting to realize, wait a minute, what is good in this economy? What is doing okay? And I think one of the canaries in the coal mine, remember, near the top, we had a lot of people mocking the poor and saying, well, we don't need the poor because look at how well Whole Foods and Chipotle are doing. Well, Chipotle, aside from being, an example of ego and what ego does to a company, and Apple has the same problem. I mean, Apple at the highs with their $100 stylus, that's the same, looks the same as the $1 stylus. They've got, a wide selection of, by the way, stylus is a Dollar Tree that look just as nice. And the ego, and Tim Cook hasn't come out with a single invention since Jobs died. Not like one innovation. And all the phones he's coming out with and devices, the specs, the internals, are no better than the competitor. So it's like that company has just completely kind of hit a wall. It's not, they don't make bad products or anything, but they're not, you don't pick up an Apple product now and say, oh my God, this is such a step ahead. It's the same as their competitors, but they're still charging a huge premium. But getting the Whole Foods, why it's a canary in a coal mine. We heard that, well, the middle class is evaporating. People are dropping into poverty, but that's fine. The upper middle class and the wealthy, they'll drive the economy. But then you start to see Whole Food stock just got its ass kicked. It just gave back so many years of gains. And I remember looking at that and going, wait a minute. Whole Foods is the best indicator of upper middle class, moderately wealthy spending. Some of them shop at Tiffany, some of them shop at other diners. You can't really pick one store where all the yuppies and upper wealthy people go, except for Whole Foods. They all go to Whole Foods. And if their sales are dropping that much, and we know the poor
there's more competition for organic foods. If you go to every retailer now, you could find organic food. That's what I've noticed, but I think that's why Whole Foods is having problems now, and it's freaking expensive
it's having problems because the wealthy, they're not, once the stock market started going sideways for 12, 16, 18 months, that kind of affected their investments and their internal sense of net worth and, whether they should be blowing money. And there were a lot of indicators like that at the highs of exactly how divergent from reality the market had gotten. But the bigger problem is, and I hear to some people that, well, people are going to want to pile into the market because they see how resilient it is and how it's gone up for so many years. The market basically needs to just go straight up here, break new highs like a freight train. But here's what people are forgetting, and Harry Dent gets into this. A lot of people will talk about demographics, get into the fact that baby boomers are all universally hitting their 65 and older period where they can pull their money out of markets without a tax penalty. And a lot of them have to be looking at a market that's sideways and thinking, what the hell am I doing sitting here? Because if the market was down more, let's say we're down 13,000, 12,000, they'd think, okay, I've ridden through the panic in 2000, 2008, and now this panic. You never want to sell at a bottom. So they'd be more likely to hold possibly. If the market was higher, they'd think, wow, look at this momentum. I'll just stay in and ride this. But a sideways market psychologically helps you justify leaving more than a really down market or a really up market. Because you sit there and go, what am I doing on this merry-go-round? Just sideways for 2 years. I'm 67. What the hell am I doing? And they keep, trying to soothe and calm these older investors, staying for the long term, staying for 10, 20 years. Are you crazy? Who in their late 60s is making a gamble that maybe they'll have a little more money when they're 80? Well, just take the money out and go retire somewhere down south. What the hell are you doing? Like, what is your mentality on that? I do think this is part of what you're seeing in this mysterious surge in gold eagle sales and silver eagle sales. The U.S. Mint, by the way, is ramping up production to meet demand in silver eagles. And gold eagles
But they
are
usually
selling.
do that every January as it is. From what I've saw, is they don't produce enough gold eagles or silver eagles, and then you see not record sales, but they don't have enough production as it is. But
If you look at a
regarding gold,
year-over-year chart on gold eagle sales and silver eagle sales, those are surging on a year-over-year basis going back, 6, 7, going all the way back to the bubble in 2011. So on a year-over-year basis, they are surging like crazy in both categories. And I think a lot of that's baby boomers saying, well, I've been sideways in stocks for 2 years. The market is a absolute. The scary thing about this market is how many trapdoor moves it keeps making. People talk about the V bottoms, but over the last 2 years, I can count, just looking at the chart, like 8 times where we just went straight down. And there was never even like good news. There was an Ebola plane. There was all these. I mean, the market just seems so unstable and fragile. Like we saw in August, like we saw just now getting around the flash crash lows. And that is it's becoming very unsettling. And you're seeing a lot of pros even write that there are no safe sectors. Even if you pick the best biotech stocks, the best FANG stocks, the best commodity oil stocks, you keep getting these 30, 40% hammers to the face out of nowhere. And it's really treacherous and unstable and weird. And gold and silver at this point, I saw a chart the other day how they've never been this undervalued relative to real estate. And Michael Pinto makes a great article. You can look up something he wrote, his complete bear case that he published last week. I do like him as an analyst too. And he made the point that real estate is still so expensive relative to average incomes and the trend in incomes, and that is not sustainable. And he's right, and I've made that point too. You cannot create a permanent gulf between the price of real estate and wages and labor participation. You can only do that if you print, ass loads of money forever. In that case, you definitely want to be in some gold or silver. And that divergence, when that thing starts to come together, and by the way, I've put at this point close to 30% of my money in physical gold and silver since August. I had no physical since August, going into August. I had some GLD.
I still think that you're a bit too early. I mean, even though I've had gold and silver before that, and probably at the wrong times, but where I disagree with you, and what I was trying to say earlier on, is that I totally agree with your assessment of the U.S. economy. I mean, they're totally lying about it. It's not as great as what Wall Street and CNBC is pumping out. But I'm looking all over the world right now. If you're looking at Europe, it's a mess. Japan is a huge mess. China, that bubble is starting to unravel, which I talked about in like 2014-ish, late 2013, I believe. And if you look at everybody else, they are doing horrible. And yes, we are doing terrible as well. But we're still the best looking gal out of all the ugly girls in the room. So that's why I'm thinking.
I respectfully and completely disagree, because in the U.S., here's the thing: in Europe and also and for most of Asia, they're poor, they're middle class. The average house size is half or a third of what we have here. We have our poor still living in houses that are way too big. We got tons of baby boomers out there, empty nesters, with 5-bedroom houses and two 66-year-old people living in them. And that is the difference between the U.S. and the rest of the world. The rest of the world didn't make that mistake. Yeah, there's a lot of real estate bubbles in Asia. You'll have, a few rich billionaires buying up empty condo buildings, empty malls, but you can bulldoze that easier than bulldozing an entire suburb or an entire city where you have all these spread out poor people. Because that's what we do in the U.S. We spread our poor people out throughout the country, give them houses way too big, and then it's something unique to America. And it's kind of, the way we built this country since the 50s, when we kind of overbuilt and made things too big, too spread out, the sprawl problem, they call it. And it's really hard to fix that. And that's why we had a crisis before. That's why we're going to have a crisis again. The simple reason is our houses are too damn big. We would have to resize our houses, a third smaller, 30%, 50% smaller, just to keep up. Hard to do. It's hard to go into a suburb and make houses smaller, or turn houses in the European-style boarding houses where you're stuffing 9 people in a house. We just didn't build out that way. I do think Europe is a lot more honest about the economic problems. They come out all the time and say, hey, we have major unemployment, we got all these riots, we got all this unrest. We're not doing that well. They kind of admit it. And Asia or China.
Right, speaking of Europe, though, I mean, I talk about this all the time about the dollar index, and the euro is like 57% of the dollar index, and I think that Europe, as you're mentioning, has a lot of problems. They're broadcasting that, but I feel that temporarily the euro may go higher and the dollar may go down because of that. But the overall trend, in my opinion, for the next at least 1 to 2 years, I feel that it's going to go lower from where it is, probably reach parity in my opinion, maybe lower than that. And what's going to end up happening is gold and silver may take a hit as every world economy, major world economy, is deleveraging. We're still deleveraging from the housing crisis in some way, shape, or form, but you're talking about the overall economy, you're still seeing major problems, and as a result, the economic business cycle is coming to an end, and what usually happens is the dollar index tends to go higher when everyone's panicking, and gold and silver may take a hit even lower from where it is. I mean, we've seen oil prices, they've gone from 144 to what, $30 a barrel right now, which is ridiculous, more than a 70% decrease, and that hasn't hit other assets yet. I mean, gold's gone down like 44%. I still think it'll temporarily go lower from where it is right now. Stock market may go.
If gold was going to go under 1,000, it would have gone there if oil hitting 27 last night. I really think that that's the window. You really would have thought, when oil was 80, 70, 90, 100, if gold ever got down to 27, there's no way gold should have been able to hold at least once touch under 1,000, and never did. And basically, if oil just bounces back into the 30s or 40s. I saw a statistic today. People are talking about all this cheap Iran oil. Well, Iran's break-even point on making a profit on oil is like close to $70. So Iran is not going to be handing out oil for $10. They could. They're not going to make any money doing it.
No, right. I mean, I am long oil, and I wouldn't be surprised if it goes down to even the teens. I mean, late teens, like $15 to $20 a barrel. And how could it go lower from the break-even point of producing oil? And that is if you have some sort of black swan event like Saudi Arabia devalues their currency. You may just see oil prices go to ridiculous levels that people haven't seen since the 1990s. So, I mean, yes.
Again, the problem is
I know you're talking about gold.
The reputation of the U.S. is starting to properly, rightly evaporate, where we pretended we were the strongest economy and the leader. They're already saying this current quarter GDP is it's going completely flat. It'll probably be revised to negative within a few weeks. So the U.S., the problem is, as I said, yeah, Europe's a mess, but we've known they've been a mess for years. And we know China has all this subterfuge and obfuscation and all these games they play. But the U.S. was fraudulently pretending to be stronger and growing and creating jobs and all these lies. and that's starting to unravel. So the gap between where we're priced in terms of our real estate, our bonds, our stocks, and reality is way bigger in the U.S. than any other country. That's one point I agree with Peter Schiff on, that, yeah, you can invest in Indonesia or go invest in, I'm sure there's investable things out there, but American bonds, American real estate, American currency, American stocks, all four of these things are hideously overvalued here. Like none of them are even close to what you'd call like a safe level if you tie them to reality and future economic output. But more importantly, what's going to happen
if we didn't live in a globalized economy, I totally agree with your assessment. The thing is, everything's interconnected, and that's why I still believe, even though you're saying a lot of things I technically agree with, but the only difference is that everywhere else is messed up, and that's where we differ.
Yeah, but and again, the poor there are not in oversized houses. Japan is filled with elderly poor people, but they're literally living in refrigerator-sized houses. Our elderly poor...
Wait, but look at Japan's debt-to-GDP ratio is a mess. It's close to 300%, or maybe over. I have to look at the statistics again. Their 10-year bond yield is ridiculous. It's like 20 basis points. And as a disclosure, I do have short positions in the Japanese bond market, but that's managed by my broker, the CMA, or he used to work there. But go ahead.
Well, America has a serious problem with too many poor people in houses that are too big. And not just the houses they bought during the bubble, but houses where their job prospects and their wages have fallen and fallen. Their property taxes are skyrocketing. I mean, they're doubling property tax here in Chicago, but their wages aren't going up at all, and the percent of them being employed isn't going up. So there's a lot of people who are living in houses that are paid off, who are barely paying the utilities and barely paying the property tax. That's a new phenomenon, which is, scary as hell. And it's geographically, it's just really hard to solve. It's hard to bulldoze all these big-ass, oversized houses in the suburbs. Northwest side of Chicago, the Sauganash area, I've got family there, and I once helped them look for a lost pet. And I'm walking around, and I swear to God, door to door, like every house, 4 bedrooms, 2 old people living there. 4 bedrooms, 2 old people. Like, they don't do that in Italy. That we make fun of Italy, we make fun of Greece, we make fun of China, but you know what? They shove people in really small spaces. And that's not a great way to live, but you know what? When economies crash, that's a great way to live, because there's nothing worse than having way too much real estate tied to your name. Look at 50 Cent. 50 Cent has this huge mansion. He keeps lowering the price. No one will buy it because the upkeep, the property taxes, the place where it's located, property always feels good to buy. And that's why property bubbles are so insidious. Like, when you buy gold and silver, it's not enjoyable at all. I don't like the way they feel. I don't like the way they look. I'm buying them on a practical level. It doesn't feel, buying property would feel great. Buying a car would feel fantastic. But I know intuitively they're not going to be worth more a year from now, whereas I think gold, silver could double when you have that loss of faith moment. And the thing that could stop the loss of faith is when they do negative rates in the U.S., just like they did QE3 right before the election in 2012. And I remember I was kind of on the side of the Fed for QE1, QE2, but when they did QE3 2 months before a presidential election, that was my moment.
If they did QE4 before the election 2016,
negative rates, yes.
I mean, what would need to happen is the whole world is falling apart, and that's the only way that I could see them doing it. If you see gold below 1,000, if you see oil hit below $20, not 20, maybe below $15, you see China on the verge of cracking up, and they're going to say it's 2008 all over again. You can't get money from your banks. This is Cyprus and Greece on steroids. That's the only way they're going to do QE4, and I don't think they're going to do QE4.
Why wouldn't they? If they were shameless enough to do QE3, which they call unlimited QE, 2 months before the election in 2012 to swing the election, why wouldn't they do negative rates, especially if you have baby boomers en masse taking their money out of the market? Because basically what negative rates are, and they have them already, well, in most of Europe, their bonds are in negative yield. Negative rates are they're a very soft way of the government to confiscate accounts. You have too many elderly people in your population or too many scared people sitting on money. And instead of outright seizing accounts or doing a Cyprus, you just softly, okay, we're going to take 1% of your money a year. We're going to sort of just creep in there. And yeah, it would drive Trump nuts, but no one protested QE3 in 2012. I saw no demonstrations. I saw no one marching in the street. They should have been for the last, for QE1, 2, 3, and TARP. But if they didn't, if there was no mass complaint about that, then what would, they're capable of anything. I mean, they're capable of doing things we have not, I don't think, imagined, or that they can get. I mean, who thought Obama would do an executive order basically outlawing private gun sales? You can only do private gun sales now if you go to someone, have them do a background check, a mental check. I mean, we had gun shows all over this country. I'm not saying I agreed with gun shows or the gun show loophole, and it was ridiculous walking into those and handing people a hunk of money and walking out with an assault rifle. And people say you can't do that. Let me put it this way. Yes, you can. That's the way. It was that easy. It really was. But the point is, no one thought he would do an executive order that extreme. Even I was like, wow, I didn't even know you could do that as an executive
Well, you have
order.
to remember he had Marxist influences all his lifetime, ever since he was a little boy, so.
Well, his first job out of college for a year was working for the Business International Corporation. And look it up, that's a CIA front company. The guy's been CIA the whole time, just like, Putin never really left the KGB. So
He's just had a weird life. If you follow all of his life, I mean, his mother had him out of wedlock at the age of 17. That just
his mother was
enough.
CIA. His mother was CIA. He was CIA. And they generally, they do it in families like that for various reasons or conditioning. But the guy's been, I mean, it's hilarious. He's been CIA the whole time. People are like, oh, he's secretly a radical Muslim and he's a communist. And he's not, well, no, he's just flat out CIA. I mean, look up. You don't work for a CIA front company unless you're into CIA or connected to them. Nobody work. That's just how front companies work. That's the rules of front companies. You don't have anyone in there because they'll see something or hear something. And the idea that he's so poorly vetted, but they had him in that front company. And look it up, the Business International Corporation, Obama, which, by the way, is a hilariously comic book villain, stupid way to name a front company. But it's like on The Simpsons when the FBI was doing surveillance and they had Flowers by Irene. It was FBI, but my point is, if he could do something that crazy by executive order, and he won't, he's a lame duck president. He's not going to do QE4 by executive order. But I do know he'd love, he'd the way his brain works. He thinks, man, get the dollar index down to 50 or 40, factories will come back to the U.S., in mass, and they would, but they'll all be filled with Elon Musk robots. I mean, that's another fantasy. People are like, well, factory jobs, manufacturing, that's going to have a renaissance. I didn't even talk about the point that the retail industry, and we talked about this in the last video, the customer service sector of the jobs market is the biggest employer in the U.S. collectively. And it is being completely automated out of existence. The cashier job, that is just vanishing at all levels of retail, and they're finding so many ways around it. And Amazon is inhaling the retail sector. But when people say it's okay that retail is evolving to where Amazon will be all of our commerce, Amazon, the amount of people Amazon employs versus how much business they do, I mean, when these 10,000 laid off Walmart employees, how many of them you think are going to get a job at Amazon? 200, if they're lucky. I mean, it's the same thing when all the Blockbuster videos closed. How many of them got hired by Netflix? 2? maybe one, probably zero. So we keep having these phases where they automate entire sections of customer service out, but then no jobs replace it. It's not like some other industry pops up and they'll go work there. There's just nothing. There's just a big air pocket. And that is a huge problem. And worldwide, when they're developing factories, they have factories now in China where it's almost 100% machine. And that's really the future too. So we're not going to have factory jobs. We're not going to have customer service jobs. That's all clouds and apps and touchscreen kiosks. And so really the world kind of needs a massive New Deal, Marshall Plan, shovels, and bulldozers and monorails and solar panels, but no one has the money. No, I mean, Europe sure as hell doesn't have we don't have the money here. We're so politically divided and broke. So what's going to kick off the motivation for that? I don't see any respected politician worldwide enough to drive that kind of needed spending. And I do think, Trump's going to get the nomination. We already know that because Cruz is just,
he's not electable.
Well, he kind of struck out as a debate, but this idea that Donald Trump's going to get in office and fix the economy, here's the problem with Trump. As well-intentioned as he is in many ways, and as smart as he is in many manners, the guy had too much of his career around real estate bubbles. And the biggest problem in this country to this day is overvalued real estate and empty real estate. And so he has blinders. So he can see all these other problems, but he can't see, like you could put overvalued real estate right in front of Donald Trump's face. He would not be able to see it. It's kind of like another prominent YouTuber who I've complained about. I'm not going to say his name. A guy who promotes house flipping and house flipping programs. People who are in any industry get biased to industry. That's the problem with a lot of gold and silver bugs. Is they keep an eye on this industry. You should listen to them when gold and silver are cheap. But they also, if you notice guys like Schiff and people of his ilk, whenever gold and silver are like up at a 90 degree angle and overvalued, they can't see the overvaluation. Like they're pretty smart guys, but no matter how much it goes up, they just like you tell them it's overvalued. They're like they have those blinders, just like Donald Trump has that blind spot to real estate. And everyone's got cognitive biases, and that's sort of the essence of trading and how things get mispriced, and how the whole point of trading is taking advantage of mispricing when something gets seriously mispriced. Like, yeah, I think oil down at 27 is insane. The idea that it's going to stay here at 27 when Russia is on the verge of economic implosion because oil is their main export, and he's got bombing runs in Syria and Iraq every day, well, he's just going to accidentally start bombing pipelines. What he's going to do. He cannot survive.
You're going to have the longer oil stays, the thing is that Saudi Arabia is going to run into problems, and I fear a devaluation for their currency. And even if that doesn't happen, low oil prices are going to stem a lot of problems in the rest of the world. And yeah, unfortunately, I think someone's going to go to war with each other, A, because they get desperate, or B, to try to get the prices of oil up. And hopefully none of that happens, but I don't see a way around that.
Right, well, I just want to say real quick, I know you disagree on gold and silver here, but if you are going to buy gold and silver...
No, wait, hold on. Let me say about gold and silver. I mean, over long periods of time, yes, I believe that it is a store of value, but the timing, I'm looking at sub 1,000. Once it gets below 1,000, then I may start to get more interested like I was in the past, but go ahead.
Well, all of my physical purchases have been under spot price 1,100. Now, going into August, I did have 10% of my money in GLD from 123. I was early on that, but then I cashed out of that, went physical, and I've been buying on dip since August, and now that's 30% of my money is in physical gold and physical silver. And the reason I used to laugh at people who said, you need physical, you got to have physical. When I started doing research on all these commodity ETFs, by the way, the USO, if you bought the USO and then relative to oil since 2008, 2007, because of the decay, just like all these other broken ETFs, you lost a hell of a lot more money in the USO and the UNG and all these other ETFs. They all malfunctioned. You show me a commodity ETF, and I'll show you, 30, 40% the thing going lower than the commodity at lows. And GLD and
Yeah,
SLV, we could easily have a circumstance where gold and silver double and the GLD and SLV only go up 20, 30%. Kind of like in VIX, when you have the VIX go up 100% in a week or some crazy move, and the VXX goes up like 5.
no, but
Like,
the thing about the VXX is that, number one, you're looking at contango and backwardation in the futures market, so
right?
that's a
But
whole
the
different
USO,
story.
UNG, same things happen. It's not as bad as the VXX. The VXX is worse in both of those, but they too have that decay and that rollover problem. But I really think GLD probably should have never been created, because it's so hard as the manager of GLD to stock enough gold and buy that gold and sell it, especially with the bid-ask spread price and delivery on gold. If gold goes up 20%, okay, now the manager of GLD has to go in his warehouse, has to buy an appropriate amount of gold. Oh, look, it's down 10. Now I got to sell 10%. And you and I know selling and buying gold and silver, it is not that fast and liquid. We can just, where it
Right.
can't. The ETF should never existed. There's a lot of people out there who have some GLD in their portfolio and think, oh, look, I've got some gold. And you don't know if that thing gets delisted, if they get sued, if some chicanery happens with that thing.
That's why I don't touch the GLD per se. I mean, I think there are like other gold ETFs which people can do research about, but I still think that if you're going to deal with the ETFs out there, they're mainly trading vehicles unless you have some sort of specific strategy. I know what people do over long periods of time with the VXX. They just short it for long periods of time, and they know that even if the VXX goes up in a period of high volatility, over time bull markets will come and the ETF will simply decay.
Well, the
But
problem
I know.
too is the GLD and the SLV, they're taxed as if you're trading a stock. And when you're trading a lot of stocks, you're getting some kind of dividend. GLD,
Right.
SLV, you're obviously not, but you're getting hit with that same tax, all the tax rules, as if you're trading a stock ticker. Now, there's a number of gold and silver products that are tax reporting exempt. Gold buffaloes, gold eagles, silver eagles, silver maple leafs. You can look up a list online. JM Bullion. Go Google JM Bullion reportable infographic, or just go to APMEX under their FAQ, and look in. When you sell to us, what's reportable, what's not reportable. And I'll tell you right now, APMEX, they don't pay me any money to say this, but they're the only dealer that's selling mint direct single buffaloes. Is it 2015, 2016, single eagles, single kangaroos, and they sell them mint direct, sealed in plastic with the APMEX logo and everything for only like $5-6 more than if you bought from Jan Bullion or any SD Bullion, where they sell it to you in a plastic flip case. Well, the APMEX one, mint direct singles, they're sealed, so it has that. There's counterfeits out there you got to be aware of, so you got to always deal with a really good, reputable source. But only APMEX has that product available at a very low premium above buying a loose gold eagle or a loose gold buffalo. And I do think the silver Philharmonics right now, you can get monster boxes at APMEX, for example. Not that many left in 2015, 2016. And the elephants, the Somali elephants, and also the Armenian Noah's Ark, which are in drums. Now, the thing about bars, and the thing about rounds in gold and silver, they're in a different tax category. If you at some point in the future go to a coin shop and sell more than 25 ounces of gold that are bars or rounds, sell more than 1,000 ounces of silver in bar or round form, it's reportable. Whereas if you buy the right coins, like eagles, like buffaloes, silver maple leafs, the main thing you got to remember with gold is you don't want gold maple leafs and you don't want gold Krugerrands. And also the Mexican coin whose name escapes me right now, because those are reportable above certain amounts. I'm not telling you to avoid taxes, but this affects their resale value. This is one of the reasons Eagles have such high premiums for silver. And if you go selling Krugerrands to somebody at some point, or selling Maple Leafs, they're going to think, well, I can only, I don't want to buy so many that every time, when I sell them at the coin shop, I got to fill out a tax form. So that's why you want to lean towards Eagles and Buffalo's 2015 or 2016 Mint Direct singles from a place like APMEX. And APMEX has good service, but more importantly, those individually sealed coins are so, it's not like $5 or $6 more than buying the loose ones you get elsewhere. So that's, and I researched a lot of dealers before I settled with APMEX. And that is...
Yeah, but speaking of tax loopholes, remember the government can change the rules at any time of the game. So just because we see loopholes now, that doesn't mean that applies 5 years from now.
Yeah, and I'll tell you, this time they're not going. You will not see another gold confiscation in this country. And a lot of people say, "Oh,
we may be taxed like crazy,
Democrats.
Though. That's the only thing.
They won't, because let's be honest. A lot of immigrants, a lot of people of various ethnicities, they're not going to let you go pull gold teeth out of them or their gold jewelry. They're more culturally, I mean, and that's true of even like the Eastern European immigrants we have in Chicago, which seems like all of Eastern Europe came here. They're more partial to it. And, back when they did the last gold confiscation, this country was more demographically uniform. Like the government just said, everyone buy war bonds, everyone grow turnips in your yard, everyone turn in your nylon, and people would just do it because the country was much more of a united, like a, like homogenous, united. They just say something, oh yes, let's all go do that. And right now, the government tells people to do stuff, they'll go do the opposite. That's why gun sales have been, skyrocketing nonstop for like 4 years, just because of the appearance that at some point in the future they're going to ban assault weapons, and they still can't unless we get Hillary and a Democratic Congress. You're not going to have an assault weapons ban, and even if you do, my feeling on that, well, then you get a revolver, you get speed loaders, and you start practicing right now. You get a lever action 30-30 or 45-70. You start get snap caps. Start practicing now. Practice getting
and
good.
Don't go to the city. That's the last place you want to be.
Right. Well,
Big cities.
Start practicing with what you think will be around after a ban. Pump action shotguns. There's things that will survive. 1911s will probably still make it through because on average, the biggest magazine you're going to get is 8 rounds. So you practice with things, and you think ahead of time. If you're going to invest, don't buy something in 9mm. People are going to want 45. If we get 10-round mag limits, if they bring back the Clinton rules, the popularity of 45 caliber will skyrocket because people are going to want the most bullet in those 10 rounds. Popularity of Magnum revolvers will skyrocket. But anything 9mm, 22, no one's going to want 9. They're all going to want 45 and 44 Magnum, and because to try, again, loophole mentality of I'm going to fit the most I can legally and the little amount of bullets I have. So, because I don't think you need. I mean, not to go down this line of time of firearms, but for home defense, a 12 gauge Remington 870, $300. Put a red dot scope on there. You buy it on Amazon. By the way, the best place to buy lasers and scopes and all your firearm accessories except for bullets is Amazon. They sell everything but bullets and magazines. Any possible accessory you can think of at the best prices too, better than Cabela's even. So get yourself an 870, get yourself a red dot scope, a True Glow. Takes a minute to put on there, almost no tools, and you're pretty much, I mean, you don't need an assault rifle for home defense. You really don't. I mean, there's a lot of people who do that. They go and buy an AR-15 or something for home defense or an AK clone, and man, they are just asking for a lawsuit when there's one stray bullet. If you stop a home invasion and you fire 13 rounds and you put 12 in the person and one goes through the window and kills your neighbor, you're going to get sued for everything you own. That's just, I can guarantee that you will not. I mean, that's so. Okay, enough of the proper. Way too much talk of firearms on YouTube. There really is.
All right.
Um,
All right. One last thing though. Markets. What do you see happening? You were very bearish since like it must have been December of last year. Not December last year, but you were bearish for quite some time. Markets have gone out to 15,900, and recently you've stated that, hey, I feel there's a dead cat bounce in the making. You still feel that way?
yeah, there is, and you know, I take a look at the Dow here because I give you a specific line. I'm still seeing a dead cat bounce in the Dow to 16.7, 16.8, because I still believe we're in a giant rounding top, and I believe that we're halfway through it. When back midway through 2015, I could see that sloping line starting in 2013, where you see that momentum like at the top of a roller coaster, and it looked like half of a semicircle of a rounding top. What that means is we're going to keep getting really sharp V-bottoms, but then we're going to roll over and then make another V-bottom and roll over, and that creates a lot of capital destruction because people keep thinking they're getting the bottom, and they think, oh boy, I went long, here's a V-bottom. But then it keeps making lower highs. We've been making lower highs since May. I mean, it's just been lower high, lower high, lower high. And it's, you have to wait for the V-bottoms kind of to play out. You don't want to be shorting into a breakdown or shorting right now at all. And the only question is, do we bounce a 16.7? Do we bounce a 16.8? It's anyone's guess. We could bounce to 17.1. We could actually bounce to 17.150 or so. The 17.3 still being a rounding top. So definitely, one thing I didn't do was use leverage because I knew it was going to be slow. I didn't know exactly the day it was going to fall. But that's, leverage is a terrible idea, I think, because the V bottoms and the elevator drops, that is here to stay. And you cannot, good luck using leverage when stuff gets that crazy and violent. It's really hard. These markets...
Unless you have the cash backing it up, unless you're really rich.
I mean, I think the best...
Or you know how to manage leverage.
Well, I was just lucky to be able to get a profit on shorting. Well, I did. So that was... it wasn't a big profit, and I was underwater for like 2.5 months. But I did manage to cover all shorts for a profit, and I'm like, you know what? I'm just going to buy a little more gold and silver here because I'm migrating the hell out of these markets, and I'm migrating into hard assets here. And I'm doing it because, again, that loss of faith moment, what we saw in 2011 was just a glimpse of how an 8% move in the dollar down could send up silver up 100%. And the next time we get a move like that, I think gold could be at above 2,200. Silver kind of has a problem in that once it gets back in the high 30s, a lot of people who got stuck and burned by the bubble are going to sell. Yes. So a lot of people say, well, the gold-silver ratio means you should be all in silver here. And I say, well, maybe not, because things can stay undervalued a lot. I'm looking at platinum. Platinum's like $820 today, spot price. It's insane. I was looking at some platinum maple leafs earlier, thinking, those are tempting, I got to admit. But you really, in terms of gold and silver, the important thing is buying something not too far above spot and buying something sealed, mint direct from a place like APMEX. You're not getting counterfeits and you're not getting screwed on the spread, because APMEX updates their price during a trading day. They update their price like every minute, and they stay very competitive. Whereas a lot of these sleazy, these commercials you see for the Glenn Beck type places, they have, they play all these games at premiums, and so a lot of coin shops too. The premiums at coin shops are just insane. I called the coin shop the other day because I was like, hey, I'm thinking of buying some platinum, maybe selling at some point in the future. And he's like, yeah, well, we're paying like $100 below spot for platinum right now. And I'm like, oh my God. And platinum coins are like $100 above spot. So when you buy platinum coin, you better have, a 3-5 year time horizon because you're $200 behind the 8 ball at that point the second you buy it. Whereas gold, like a gold buffalo sealed, that's, they're generally going to pay you above spot for that. Not a lot above spot, but, platinum, nobody wants it. And it's kind of messed up. But one of the things that's killed platinum is a lot of vehicle manufacturers have gone to palladium for catalytic converters, and that's how Volkswagen got in trouble. They're going to have to go back to platinum maybe or invent something else. But that's one of the reasons platinum's been getting its ass kicked for so many years, disproportionately, because automakers now don't even need it except for diesel. So that's the mystery. Whereas silver, you can't make, nowadays, water filtration more and more, even municipal major water, they're using silver, and they're using it in the little Brita filters, like Mayvia filters you sell at Whole Foods. They even say right on the side that they use silver crystals in there. More importantly, the UN, we had that big climate conference, and everyone pledged to do a lot more solar and spending on solar, and you cannot make solar panels without silver. Like, silver is the most reflective element. It's the most conductive. It's got various solar usefulness where you're basically betting on the future by buying silver. It's not just betting on the past or betting, being a Luddite or. So I do think at these prices in the 13s, my God, I do like gold more. I think you should have three-fourths of your precious metal money in gold. And I think you should, well, firstly, you should have 25% of your money in precious metals. I know you disagree.
Isn't that high compared to what usually everyone says? I mean, I don't want to get into
but the problem is they say that at the highs. When gold is like, well, the problem is you have to alter those allocations based on where the market's trading. For example, when gold was 18, 17, you'd have all these guys on CNBC and TV say, well, yes, you should always have 10% of your money in gold. Well, yeah, I guess if gold's $1,700, $1,800, if you can buy 10% of it, but when it's under 1,100 spot, you got to kind of use a larger allocation, at least if you think, whatever you see down the road for the next 2 years makes it undervalued at this point. So, because most people, especially in America, their biggest investment, where they have almost all their money, is real estate, which is real estate should have never been an investment. It's not a way to make, it's a place to live. You don't, the mentality.
No, I totally agree with that.
So all these people who have 80% of their money tied in overvalued, oversized real estate, who are like, oh, geez, gold, you got to be careful with that. Are you kidding? I mean, that's just their mentality in this country. And so many poor people are getting cars, $20,000, $30,000 cars because getting auto loans to everybody. If you walk in the door, no job, don't speak a word of English, they will hand you the keys to this day.
It's subprime loans. It's all of this communist, Bolshevik, whatever you want to call it.
Well, it's
handouts given to everyone.
When you do that, in 10 years, most cars are worth nothing. In 8 years, 7 years. So by the end of the loan, you have nothing, and the bank has nothing to come get if 6 years into your 7-year loan, you stop paying. So it's for both sides of the equation.
That's why the Federal Reserve didn't want to raise rates, because people with variable interest rates for homes, or people with homes with variable interest rates, or people with cars with variable interest rates, the minute those rates started to go up, then those guys are going to get hosed. Kind of like what happened in 2006, 2007, when Bernanke was...
But I understand the mentality of wanting to...
5.25.
I get the mentality of wanting to have a nice car, especially a lot of poor people. It's their only like pride. And even if like gold and silver, at the time I bought some, there was some property I could have bought from a family member down south, and I'm like, it would feel so much better to buy that property, way better. But I know this other way is a better, buying gold and silver at this price is a better investment to make. So this is the
Yeah, we
important thing
shall
about
see.
investing. You have to, good investments have to be made against your feelings. I mean, if it feels good in terms of instant gratification, chances are it's not going to go well. But I think we've probably gone past the time limit, so.
Yep. And Panama, before I let you go, how can people follow you again?
StockTwits and Twitter. Panama
Alrighty.
Orange on StockTwits and Twitter. You can also look me up on SoundCloud, but that's a whole different subject matter there.
Alrighty, Panama. Thanks for coming on again.
Okay.